What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with August. Oh no, you missed your name's gone. Can you please introduce yourself, August?
August Biniaz, how's everyone doing?
Okay, yeah, that's fantastic, fantastic. And for those of you in the audience who haven't seen a Chance Encounter before, this is how it works. I interview commercial real estate investors, and then I go through the 5 different motivations that commercial investors generally have for why they want to get their next acquisition, and I say, which one's you? Then I go through the Dan Does Deals roll die, commercial deal roll die, with the 6 different roles in a commercial deal, and I say, which one's you? What's your core competency that you're most likely to contribute to your next commercial deal? And then we go through ideal property, but before we get too far ahead of ourselves, could you please introduce yourself for the audience so they know exactly who you are?
Absolutely. August Biniaz, I'm a co-founder of a real estate investment firm, CPI Capital. We are a Canadian-based firm that acquires U.S. multifamily assets. We partner with Canadian LPs and U.S. LPs to buy U.S. multifamily.
All right, beautiful. And I'm not a jealous man, so I don't really get all messed up because he has a nicer beard than mine. But let's talk about motivation for a second, which means I turn around here and I click on here and I click on there and I click this button and ta-da! I go through the motivation piece first because sometimes I have newbies on the show here and everybody knows their motivation, but they don't necessarily know the role that they'll play. So I go through the motivation first. First motivation, preserve purchasing power. Okay, so if you have a family office or for some reason you rely on the cash flow that comes from your wealth, your assets, in other words, then your biggest concern is inflation wearing away at the purchasing power of the cash flow. And you have to keep on making acquisitions to make sure that you keep the cash flow up to date. So inflation will ruin the party. So that's the first motivation for some people. Second motivation is my one. See, I've got a background in tech and mass marketing, all that e-commerce stuff. And that makes me a high wage earner, but that also makes me a high taxpayer because income is the most heavily taxed way to get money. And so it hit me. It's like, well, why don't I pivot into these commercial properties and into the business and then get my effort and time rewarded in the form of equity, AKA wealth. So that's what I'm up to. The next one is the most common one. People want to fast track their retirement. And part of that, it means maybe the person will become an accredited investor and then move someplace with a low cost of living. But no matter what, it really means that one day the person doesn't want to work very many days of the week or days of the month or anything like that. And that's what I mean by fast tracking retirement. But that's in contrast to the next group. They're so ambitious, they'll be working 7 days a week, possibly 8 if they can get away with it, because they want to buy their entire hometown. And there's no other substitutes that they'll allow for. So if you're looking for generational wealth, if you're looking for making sure that your great grandchildren never have to get a day job, then this is you. And the last group, which, there's some overlap, but what I really mean by this last motivation is that some people choose a sector of society, or maybe it's the environment or animals or something like that, and they want to have a bigger social impact. And they realize that accumulating wealth is by far the best vehicle to have that social impact. And so that's why they are making commercial acquisitions. So out of those 5 different motivations, which describe you best, which resonate with you best?
Out of those 5, really, what motivates us? I'm super focused on building CPI currently. So there's a bit of motivation coming from every different angle. Obviously, there is a level of giving back and building, purchasing better communities that we purchase, making them better, making the lives of the tenants better, obviously creating jobs. That's also very important for ourselves here at CPI, for the contractors who look after our the upgrades on our properties, and the property managers and everybody else in the whole ecosystem. So those are really the motivations, man.
All right, that's a beautiful thing. So then let's get into the specifics, and of course, the fact that you are in Canada but focusing on the U.S. We'll get to that in a second, especially because my hat talking about 506B. But for those of you who aren't that used to commercial real estate, or you could use a refresher, if you go to dandoesdeals.com, you can download your own template of this die so that you can start explaining this stuff to your friends and family and all that kind of stuff, because this will really give you the main pieces so you communicate effectively with them. So let's go through the 6 different roles. The first one is the role of a repositioner. A repositioner has to look at a whole whack of different properties, and they have to do something fancy called underwriting them. And if you want to use a word that's not fancy at all, it's called doing the math, making sure that the seller of the property that you're looking to add to your portfolio, it's actually making the amount of money that they say that it is, because that's kind of important if you're going to be buying it. But the main thing that they're looking for realistically is upside. In other words, how can they make this property make more money? How can they reposition it? So their acquisitions and whatnot. The two different tools in their tool belt for finding upside are more efficient operations. So if they're cutting the costs, they're stopping those Benjamins from going down the toilet, then the property is worth a lot more. And there's a lot more to operations than just unclogging toilets and collecting rents. It's also bookkeeping, and then there's the leasing agent, which is a marketing piece, which is one of my fortes. So operations is many different things, and that's one way to get upside. But right now, that's probably not enough because real estate's so hot. So repositioners, even on more ho-hum times, they need a contractor team to fix the place up so they can charge more in rent, okay? But if you're like me and you're from the internet, then you're gonna need boots on the ground. You're going to need a local who can drop by at more or less a moment's notice. I don't even want to have to find my passport in an hour, so I'm not going to be the guy who's there in an hour. I can answer a phone and brainstorm, but as far as being the local, that's not me. And if you're a tenant, you probably look at those people and say, oh, they're the owners, okay? But of course, there's more to it than that. There's also the financiers, there's the banks, the capital raisers and whatnot. And if you want to borrow a whole whack of cash to buy a commercial property, you're going to have to talk to them. And they're going to have a funny question that you're not going to run into in most coaching programs, which is, who's your sponsor? Who's your KP? The way it works is that if you want to get a loan, and let's say you want to buy like a 350 unit apartment complex, well, because you want the loan, they're going to want to see somebody who already owns a 350 unit apartment complex, even if you're Elon Musk. The other restrictions you need to provide some liquidity, and you also have to have a balance sheet, at least the amount of the loan. And if you have all of that, you have yourself a commercial real estate deal. So August, in that equation, if you're from Canada, I'm imagining a big part of it is the financier piece. But what are your core competencies that you're most likely to contribute in your upcoming deals?
Yeah, exactly. Financier would be where we fit in much more, as you mentioned. But it's funny enough how through my career in real estate, I've played multiple of those roles. And now in commercial real estate, when we buy these large assets, it's definitely a team sport. So there's a dedicated person or a group that manages each one of those sides of the dice.
Okay, and so we'll get to whether it's generally 506C raises or the funds, or how you do it in Canada, because I'm far more familiar, even though I'm Canadian, I'm far more familiar with American law. But let's talk about buy box before that, which is the ideal property. So for you guys, can you give the geography, the unit count, and the class of what's easier to say yes to if somebody brings it to you, what's more difficult to say no to?
Definitely, for sure. No, it definitely starts with the region. So we're looking at the Sunbelt states. We're focused on certain states. We're on the West Coast, Nevada, Arizona, Texas, and then on the Southeast, we're looking at Florida and North and South Carolina. Those are the states that we're looking at, and as far as the asset class, initially when we started this business, it's very common to do Class Cs, Class C properties, which are possibly in a Class B neighborhood, and doing certain upgrades and bringing them to market. But our two of the deals we closed on in 2021, they were both Class A with a value add potential. So even though they were almost brand new assets, there was a value add component where we could go in. For example, a certain property had, even though it was built in 2019, the appliances were black, and we wanted to upgrade those to stainless steel because the market rents had gone up so much higher, 20% year over year. So we could easily upgrade the appliances and request those types of rents.
Yeah, that's a really smart move. That makes a lot of sense. I've used dark appliances before. I find it to be a bummer personally. It's just like it just sucks life out of the room a whole lot. I don't know if you're on the design side or if you outsource that. But as far as ways to reach you, though, what's the best way? Like I see you on LinkedIn all the time, and we're both in Yona's challenge, I believe. So like, what's the best way to reach you? Is it a website, or is it LinkedIn, or is it something else?
I'm very active on LinkedIn. Frankly, I'm on YouTube as well, but LinkedIn is probably the best way to reach me. August Biniaz, our website, cpicapital.ca, also another way to reach me. But LinkedIn would probably be the best way.
And for the record, I do have dandoesdeals.ca as well, but I don't really do anything with it because I'm not a huge fan of red tape, I guess.
For sure. Do you want to touch on a bit about the 506C and 506B and the comparisons here in Canada and just the nuances? Do you have some time for that, or?
I definitely do, and there are two things that I'd like to get stitched up before we do that, which is one of my favorite things. Just so that we're going through the format, how people are used to it, is one of my favorite things about commercial real estate is how helpful people are, and I chalk that up to the fact that nobody is all of these sides of the die at any time. You're always predominantly one side, or maybe you're doing like a 50% job of another or something like that. But without breaking any SEC restrictions, which in the US, you cannot entice investors. That's the term. Enticing investors is a big fat no-no. So that's the one that you're not allowed to mention, really. But who's the best person in real estate to reach out to you? Is it like operators in your geographic areas? Is it people who want to learn more about real estate, or who can you describe the perfect person that you're better suited to help than other people?
Yeah, for sure. In my case, probably would be passive investors, Canadians who are looking at the U.S. market and the tremendous growth it's had, and all the money that could be made in the U.S., but they either don't know what operator to partner with, or when their operators, there's issues with cross-border taxation and double taxation, particularly because most deals are organized within an LLC, and that is the most untax-friendly structure to have, because then it creates double taxation. So I'd love to talk to any passive investors looking to invest into U.S. real estate or U.S. multifamily. And then secondly would be operators, again, in those states that I mentioned, Arizona, Nevada, Texas, North and South Carolina, and Florida. If you're an operator and you specialize in acquiring multifamily assets and doing value add, more than happy to connect with you and see what kind of deals you're looking at, and possibly partnering with you as our boots on the ground.
All right, that's a beautiful thing. And I got one thing to say to the people in the camera, which is if you look under my left hand, you'll probably see the red button of sadness. And you don't want to be sad, and you definitely don't want me to be sad either, right? And all you have to do to kill the red button of sadness is click on it, and it'll turn into the gray button of tranquility. And that means that YouTube pays for these videos instead of me, which is a lot better. Okay, it doesn't cost you anything. It's absolutely free. It means my videos might show up on your list of suggestions. Okay, but even just subscribing, you've done me an enormous favor, just like you have done me an enormous favor by coming and joining me on this chance encounter today, August. This has been fantastic.
Absolutely. Thanks for having me.
Let's talk about the differences between the Canadian system and the American system. And I guess I'll start by mentioning the context of 506 BME, which is that because my background, I used to work for a CRM company, the sector of web.com. And, you know, I worked for about a dozen or so seven-figure online businesses that were running different shopping carts. So I know the CRMs. I used about a half dozen of them or so. And this is what people normally do when they capital raise. They'll either just email everybody, which is against the law, or what they'll do is they'll have a certain group that are either accredited investors or they are people who have a prior existing relationship, and they'll only send their emails to that list. But the problem is that doesn't serve as proof or documentation or evidence for 506B purposes. And so what I was looking for as a guy who did programming and app development and all that sort of stuff is I knew that there's the co-stars out there where they got billions that they can work with, and so they can squash me like a bug, you know, to use, you know, Mr. Wonderful Canadian Kevin O'Leary use his way of saying it, right? So I needed to have something that is super streamlined. It had to be a one-trick pony, and it had to do that one trick very, very well. So that's what 506 BME is all about. It's about documenting that relationship where I am the third party verification and you do qualify for all of those restrictions. So that's the big thing about a B is it has to be private. If you want it to be public, you have to file for a 506C. And but then you can only take accredited investors. They use the same term in Canada, but they use the maple syrup smelling dollars to denominate it, and so the amounts are different. So why don't you take it away as far as like what comes to mind after what I just said, or what would you like to add for Canadians?
So basically, in the private markets and the exempt market, as we call it here in Canada, you're exempt from filing a prospectus and going through an IPO. So there are a list of exemptions. Now in the US, I believe there are more exemptions than just the 506B and 506C, but those seem to be the common ones that real estate private equity firms use to raise capital. Here in Canada, now the difference between Canada and the US is that each province has its own securities commission, and their rules are just a bit different for each province. There are national instruments that are across the board for every province that they have to follow, but every province has its own rules and nuances as well. So there are a list of exemptions that we could use, and the one that comes to mind, which is that probably compares the most to the 506B, is the private issuer exemption. Now, the private issuer exemption allows you to raise from accredited investors, but it also allows you to raise from family and friends, executives of the company, business associates. So it kind of gives you that freedom, but it caps it at 50 investors in total. So it's very similar to the 506B. Now, as far as the 506C, we have the accredited investor exemption. That's actually what it's called, and which allows you to raise from accredited investors and allows you to advertise and what have you as well. Now, as far as the advertisation, we don't have as much restrictions as black and white as it is in the US. I mean, the 506B and C is pretty clear that if you're trying to use the 506B offering and you have used it to raise capital, but then you start advertising the deal, you've automatically triggered the use of 506C. Now you can no longer use the 506B because you've advertised the deal to the public, because the logic is, hey, the 506B is supposed to be for family and friends. There should be no need to advertise it. So why would you go on and advertise it to the public? So I'm not a lawyer. I'm not a securities lawyer or an expert. I feel like I've become somewhat of an expert because I've just been so much involved in it, but I'm not an expert in securities law. But there are not as much black and white restriction when it comes to advertising and marketing here in Canada. There are other exemption that can also be used, which the one that's called the offering memorandum exemption. It's like a prospectus light is a shorter version of a prospectus. It's still a very lengthy document that a group can create for the deal that they have. There's a need for financial audits of the asset they're purchasing, so might be a bit difficult for Canadians trying to do a U.S. deal because you might not get those in time. And there's also the market is so competitive that you might not just have enough time to draft an offering memorandum, which at times takes 30 to 60 days, and then still have time to raise capital and close on the deal. But the offering memorandum exemption allows you to raise from anyone, allows you to advertise, no minimum investment, accredited and non-accredited. Ontario has this concept of sophisticated investors as well, but in BC and most other provinces, you can pretty much raise from anyone. So those are the main exemptions that are used. There are other exemptions as well. Minimum $150,000 exemption, as long as a company that's been incorporated prior to this business venture that you're raising capital for, that company can invest, as long as they invest $150,000, the company and its principal are seen as accredited, so they can invest in any project. That's really those are the main ones, really.
Right, right. Yeah, that's fun. And you mentioned a couple things that I want to talk about. One was the number you said there were 50 investors allowed. On a 506B, it's 35 to my recollection. So there's one big difference. But I've always loved that term, sophisticated investor. I remember when the real estate attorney was one of my main mentors. When he was talking about that, I said, it's like, so if I'm ever going to court, and like the question of whether or not I'm a sophisticated investor comes up, I will eat crayons in that courtroom at that exact time, just so nobody thinks I'm sophisticated in any regard.
Yes.
At all. I'm not above that. It's like, yes, you are. Bunch of Crayola teeth. Yeah, that'd be pretty amazing, I think.
For sure.
But
Just a quick thing on that maximum numbers. I believe for the 506B is 35 family and friends maximum, but then it allows you to raise as many accredited investors as you want. Doesn't cap you on the accredited side. So I believe you could raise. Is it, or is it capped?
I'm pretty sure it's all combined. I'd love to
combined.
see that in the comments here, because one of the other things too is like here I am building a software specifically for 506B. So there were some very select things that I needed to know. And if I really show my hands, one of the things is that if you can be in 506C, that makes way more sense than 506B as far as like profitability and whatnot. But I was trying to find out why else would somebody choose to use a 506B even if they are accredited. And one of the answers that I got, which was enough for me, is that the verification process that you're an accredited investor, like it's got to be somewhat intrusive and time consuming. So it's probably easier to do the 506B. But as far as in the US, it being more black letter law, all the SEC attorneys that I've talked to, it's like, no, they're lamenting how it's all gray in the sense of, they say is you can't, entice investors. Because it could even include if you're in a washroom, a public washroom with somebody, and you're telling them about the offer, then somebody walking by could still nail you and claim that you were publicly offering, and so that's a pretty tough one, and it all comes down to documentation. So that's the one trick that my one trick pony is really looking to solve, is documenting the relationship so that you can say, it's like, yes, this person knew who I was. And, and if they don't, then it's definitely their fault, not mine. Like I set up the hoops where it's like, this is as good as is practical according to, cutting edge technology and what they do. Like what does DocuSign do? What does like I was in the credit card side of things, so I used to have admin access to literally millions of unencrypted credit cards, their billing address, expiry dates, whole 9 yards. And so that's what they're most careful with when it comes to online stuff. So that's why documenting the relationship is the big one. So in Canada, I imagine there isn't some sort of solution or something similar for documenting on, like, how do you prove that you had that prior existing relationship so they can be, technically a friend or family on that one.
Yeah, I don't think there is the requirements of that pre-existing relationship. I think it defines what friends and family is. You can't be your third cousin, for example, similar to the U.S. But the pre-existing, I think they do that through incorporation. So if an incorporated company is investing with you, they need to have been incorporated prior to this deal coming along. But again, it's a maze. It's very difficult. It's just one component of commercial real estate and this real estate private equity space that we're in. So it's great that what you're doing. I'm really look forward to. Is your platform already functional?
Yeah, I've got it where like I can add people and people can satisfy the relationship and they can document it, and it's coming into beta in January by the looks of it. I've already put lipstick on it, so it's pretty. And that's very, very important. But right now, the waiting list, so right now it's the 29th of December, and the waiting list is active on 506b.me. So if you want to be notified, the main appeal is that you can be compliant with 506b by just getting your the people in your investment to click on a link and watch a video of you saying who you are, some idea, just basically qualifying and satisfying those 506b requirements for the previous existing relationship.
Great, that's awesome.
Yeah, exactly. So I hope you enjoyed this little addendum on this chance encounter. Just so you know, August, I'm going to put a little bookend in between to say it's like, stay tuned, because we're going to talk about the differences between Canada and America and what to do. Maybe we can hop on sometime later. I'm not sure if you're involved directly in incorporating, like perhaps in Delaware or something like that, with like a C Corp instead of an LLC, if you're a Canadian, or if I think that'd be interesting for another bit, if you're game for that another day. But thank you for joining me. Sounds good.
Thanks for having me.
Sweet. All right, thanks, man, and thank you for watching. Make sure you hit the subscribe button so YouTube pays for this stuff, huh? Thanks. Bye. All right, cool.
I just want to tell you, because I've actually seen your website, Real Estate is a Scam, before, and I loved it.
Oh, cool.
Yeah, because I think it's really so spot on. There's good stuff, bad stuff in every industry.
Yeah, make sure you subscribe, like, and hit that notification bell. For Dan the Man.
And thank you. Turn that subscribe button from red like his beard to gray like his beard will be.
So I met Dan through some networking groups for real estate investing. He's a great guy from what I know about him. He's very ambitious, and he makes it easy to come on with his questions and has a great setup. It's easy, it's clear, concise, and I'd recommend going on his interviews for anyone that's considering it.
It was unlike anything I've ever experienced. It was super fun. The process was so easy a caveman can do it. I mean, if you guys haven't done it yet, you guys need to get on his calendar. Just take 15 minutes of your time, get exposure, find out who Dan is, what he's about. He's a true trifecta. And if you don't know who he is, get in touch with him. Google his name, find him on LinkedIn, do whatever you can, just reach out to him.
So I really appreciate the format. Like I've told you a couple times before, I think it's really great because me personally, I'm very long-winded. I have to purposefully make things more concise, but the way I take things in is I definitely prefer things to be concise and straight to the point and concentrated. And the chance encounters really do that great for individuals. So you can get a good grasp on who they are, what do they do, why do they do it, what space do they operate in. That's why I love chance